is doing the same thing.
All right.
Matt, thank you.
Thanks.
Thanks, Matt.
Joining us now is Damian Paletta. He is the deputy business editor at the Washington Post, and Douglas Holtz-Eakin is a former chief economist on the White House Council of Economic Advisors, and he's also the president of the American Action Forum. Doug, let me start with you because, we heard there from Senator Warner who accused some of these investors of being bad actors and crying fire in a crowded theater. But from everything that we now know about the fundamentals of SVB, there were problems there. So is that the right description? Because there was a fire, it appears, at this bank. What more could investors have done?
Yeah, I think the real problem was the bank. And we know that it had a heavy investment in long-dated treasuries that had diminished in value because of the interest rate rise. They hadn't managed this process at all. And outside depositors could see this. They knew what the balance sheet looked like. And it was yelling fire because there was a fire. So let's get our money before the entire bank burns down. That's not bad behavior. That's prudence, and it's the bank's failure and the supervisor's failure that put it in that position.
Damian, the optimism we're seeing across the market after the reporting that the big banks are coming in with this lifeline for First Republic, does that solve their issue short term? And also, is this replicable if we see this with other mid-sized banks? How many times can they all get together and extend tens of billions of dollars to these banks?
That's a great question. I mean, obviously, it's a positive development that this bank, which has about $200 billion of assets, it's a pretty big bank in California, is about to get a rescue from other banks. But at the same time, we can't be in a situation where every 4 or 5 days a major U.S. bank is on the brink of failure, and there has to be a rescue plan. As you say, eventually the banks are going to run out of money to kind of bail out other banks. So it seems like if they can firewall this crisis right here and make this the last time they have to do it, and it does inject some certainty among depositors and investors that the banking situation is going to settle down, then I think it could be a positive. But if we're doing this every couple days, kind of careening from bank to bank, they're going to have a bigger solution, because it doesn't seem like between what is happening here this week in the United States and what's happening in Switzerland, a long-term strategy to have governments intervening every few days to try to settle down the banking sector.
Well, to that point, Doug, we heard from the Treasury Secretary, and I'm going to quote from her today. She said deposits in U.S. banks will be guaranteed only if a systemic risk determination is issued. It seems like that's much easier said than done. I mean, they were scrambling over the weekend to determine that that was indeed the case for SVB, because it wasn't until it was. So do you read that as reassuring in terms of trying to prevent another situation at a different bank?
I read this as her wanting people to think they haven't extended a blanket guarantee to every deposit in the United States. But if you look at what they did with Silicon Valley Bank, they declared it systemically important so they could guarantee all the deposits. So this does nothing to constrain their behavior in any way. They can take a look at any bank and just say, well, systemically important, let's guarantee all the deposits. So I think they're still trying to pull back probably what was an overreach. The 100% guarantee of every deposit stands out as a really important precedent that they set with Silicon Valley Bank. I am not as worried as some about the sort of broad banking system. I think the fact that all of the big banks could get together and help out First Republic Bank is testament to the strength of the banking sector. And what we've seen is these regional banks all have very narrow business models. First Regional Republic Bank and Silicon Valley Bank have the same customers for all practical purposes. And they all got in trouble at the same time, and their depositors needed their money at the same time. And we don't see that across the whole economy. We don't have broad-based downturns. We have a tech startup downturn, and it's caught these two banks up. So I think going forward, there's less of a risk of seeing a lot of these.
Damian, let's get your take on this exchange between Secretary Yellen and Senator Elizabeth Warren. We're all waiting to see what the Fed does on we expect the back end of this turmoil within the banks. But we heard from, give that to me again, Control Room just said something to me important. All right, I'll just read it since we don't have the side. She said, over the last few days, we have heard a lot of Republicans say that the collapse was not their fault, that it was the banking regulators that were asleep at the wheel. And believe me, I have questions for a lot of the banking regulators. But Congress handed Chair Powell the flamethrower that he aimed at the banking rules, suggesting that Chairman Powell has some culpability here. Give us the context around that from Senator Warren.
Sure. So there's a financial crisis in 2008, obviously, that was devastating to a lot of big banks and smaller banks. In 2010, Congress passed a law, the Dodd-Frank Act, that created much more rigorous regulatory structure and made the Fed more powerful in terms of making rules that were supposed to force banks to be more safe. Some of those rules were dialed back, both by a law that Congress passed with Democratic and Republican support, and by actions the Fed took a few years ago to kind of go a little easier on regional banks in particular. And so those rollback of regulations, I think, is getting a lot of scrutiny now. Why did the Fed decide to go easier on the banks when times were good? Because it's when times are a little more strained, especially when there's a big change like interest rates are going up, that these banks can come under pressure. And so I think there's going to be a lot of scrutiny, both from Congress and even inside the Fed, as to whether they went too far in rolling back those regulations and whether they need to maybe rethink what they did so they're better prepared for what's in the future.
All right, Damian Paletta, Douglas Holtz-Eakin, thank you.
Yet another recording of President Trump pressuring Georgian officials to overturn the state's 2020 election results has surfaced. We'll have those details.